This is an astonishing number. It's helping to fuel this rally on Wall Street. Investment banks also sending stocks solidly higher. Remember, Morgan Stanley, Goldman Sachs both posted results before the open, better than expected revenues. Joining me now to discuss, Erin Gibbs, S&P Investment Advisory Services, and from Money Map Press, Keith Fitz-Gerald. Erin, last time you and I spoke, you were a little bit, I felt some anxiety that I didn't feel from you previously. Are you starting to feel a little bit better? You get these earnings are coming in. You know, we still have a long way to go in the earnings calendar. But that JOLTS report underscoring an amazing economic recovery in this country.
That, and as well as the financials doing so well. I mean, certainly not only did they massively beat estimates, and they're growing at 20% in the third quarter when expectations were closer to 11. We're also seeing really positive guidance going forward. And so having a strong financial sector is really one of those fundamental components of overall having a great market. So, you know, we'll see how it goes with the technology stocks and the communication services, but these financials, the jobs report is just really solid fundamentals for us.
Keith, 7.136 million jobs. Some of the milestones here: construction at 298,000, up from 215. Manufacturing close to 500,000 from 400,000 a year ago. Financials 339,000 from 263. Wholesale 238,000 from 199,000. Here's a tidbit for you. It took us 36 months ago from 3 to 4 million job openings. 11 months ago from 4 to 5 million. 12 months ago from 5 to 6 million. Look how quick we got to 7 million. Just 7 months. This is, Keith, we've never seen a jobs employment situation like this ever in this country.
No, I can't recall it, certainly not in my career, but isn't it cool that we've got real growth and real money on the move, Charles? This is the stuff that you and I dreamt about as we were coming into this business, and now we're living it.
We are living it. What was also interesting, Keith, is the quits number was down. Now, for folks who aren't familiar with it, this report takes the job numbers. Also, it measures how many people are quitting their jobs, you know, because when enough people can say, take this job and shove it, it means the economy is really on fire, right? Because you think you got a gig around the corner. That number is still kind of low compared to all the jobs out there. I don't know. What do you make of that?
You know, I'm still looking at that number closely. I think that nobody ever quits a job because things are good. So I tend to flip that around. I'm a glass full, you know, glass half full kind of guy. I think there's some opportunity there, and that's why that number is the way it is.
Erin, we talked about the financials, but all eyes are really on technology. Now, yesterday, Adobe gave us some updated guidance. They're leading the tech sector, but of course, some of the other beaten down names are going to have to come through. Which ones are looking intriguing to you? Which ones you think could perhaps take some leadership here?
So certainly more in the software side. Right now, anything to do with semis and hardware, anything that's attached to memory prices is really looking rough. Though they're probably going to have a great third quarter and report well, the problem is the guidance going forward. And we keep seeing memory prices going down, and we're expecting further guidance downward. So that might be a little hard hit. So I'd stick with any of your software services, but be a little wary of semis and hardware.
Broadly speaking, we are, you know, we're not that far from the all-time high. Some would even argue the last 2 weeks could be categorized as typical consolidation after an amazing third quarter in the market. Is it possible, Erin, that we can get enough momentum coming out of this earnings period to end the year in a big bang?
I think it's very possible, and one of the things that is a motivator is the Santa Claus rally. So, you know, that's not a technical term, but it does tend to happen. Retailers are really expecting one of the biggest years ever when it comes to the holiday sales season. So that could again push consumer sentiment and overall investor sentiment positive and help us towards that positive push at the end of the year.
Keith, same question for you. Right now, the S&P technology sector up 2.7%. It's the #1 winner in the market right now. A lot of folks looking to pick up those names, those high-flying names that have been grounded. Are they going to be good enough? Can they resume that sort of invincibility that they sort of lost?
I don't know about invincibility, Charles, but I certainly expect them to resume a leadership position in the portfolios. These are the companies that are big, they're liquid, and they're owned by every major institutional fund around the world, a lot of whom were shaken out last week. So they've got to come back in. There's got to be window dressing. And, of course, individual traders want their bonuses. So you know what? I think there's going to be a sharp run into 2019.